The world financial system faced a severe crisis in 2008. Trust in traditional banks and government financial control was low. It was in this climate of uncertainty that a new idea emerged. In October 2008, a person or group using the name Satoshi Nakamoto published a white paper. This document was titled Bitcoin, a peer-to-peer electronic cash system. It proposed a radical new form of money. This money would be digital. It would operate without a central bank. It would allow people to send and receive value directly. The white paper laid out the technical foundation for this revolutionary concept, detailing the blockchain technology that would make it possible and secure. A few months later, in January 2009, the Bitcoin network came to life. Satoshi Nakamoto mined the very first block of Bitcoin transactions. This block is famously known as the Genesis block. Embedded within the code of this block was a hidden message. It read, "The Times 03 Jan 2009 Chancellor on brink of second bailout for banks." This message served as a timestamp. It also acted as a commentary on the financial instability that Bitcoin aimed to address. The message highlighted the core motivation behind Bitcoin's creation. It was a direct response to the perceived failures of the existing financial system, offering an alternative path forward. For a while, Bitcoin remained an obscure project. It was mostly known to cryptographers and cypherpunks. These early adopters were intrigued by its promise of decentralized currency. The first real-world use of Bitcoin for a commercial transaction happened on May 22, 2010. A programmer named Laszlo Hanyecz paid 10,000 Bitcoins for 2 pizzas. This event is now celebrated annually as Bitcoin Pizza Day. It was a crucial moment. It demonstrated that Bitcoin could function as a medium of exchange, not just an abstract concept. Though the value of those Bitcoins would later skyrocket, the transaction was a landmark proof of concept for the nascent digital currency. The early community around Bitcoin was small but incredibly passionate. They were driven by a shared belief in the potential of decentralized digital cash. Forums and mailing lists buzzed with discussions about the technology, its implications, and its future. These pioneers experimented with mining, coded wallets, and built the initial infrastructure. They understood the groundbreaking nature of digital scarcity, a core feature of Bitcoin. Unlike traditional currencies that could be printed at will, Bitcoin had a finite supply capped at 21 million coins. This inherent scarcity was a fundamental aspect of its design, intended to protect its value over time, much like precious metals. Bitcoin slowly started to gain more attention beyond its initial circle of enthusiasts. Its price began a gradual ascent. A significant milestone was reached in early 2011 when Bitcoin achieved parity with the US dollar. 1 Bitcoin was worth $1. This marked a psychological turning point. It showed that the digital currency was gaining tangible value in the eyes of a wider audience. By late 2013, the price had experienced its first major bull run, surging past $1,000 per coin. This rapid appreciation brought Bitcoin into the mainstream media spotlight. Simultaneously, the success of Bitcoin inspired the creation of other digital currencies, often called altcoins, each attempting to improve upon or offer different features than Bitcoin. However, this period of rapid growth was not without significant challenges and setbacks. The largely unregulated nature of the early cryptocurrency ecosystem made it vulnerable to scams and hacks. The most infamous incident was the collapse of Mt. Gox in early 2014. At the time, Mt. Gox was the largest Bitcoin exchange in the world. It declared bankruptcy after claiming to have lost hundreds of thousands of Bitcoins belonging to its users due to a security breach. This event sent shockwaves through the Bitcoin community. It drastically eroded public trust and led to a prolonged bear market, often referred to as the crypto winter, which lasted from 2014 through 2016. Despite the Mt. Gox disaster and the subsequent price crash, Bitcoin did not disappear. Instead, the community focused on improving security, developing better infrastructure, and learning from past mistakes. The period between 2014 and 2016 was one of consolidation and quiet building. Then, in 2017, Bitcoin experienced an unprecedented boom. Its price soared dramatically, reaching nearly $20,000 by December of that year. This incredible rally captured global attention. Suddenly everyone was talking about Bitcoin. This boom also fueled the initial coin offering, ICO, craze, where new cryptocurrency projects raised vast sums of money, often with little more than a white paper and a promise. The 2017 boom also brought underlying tensions within the Bitcoin community to the forefront, particularly concerning its scalability. As Bitcoin became more popular, transaction time slowed and fees increased. This led to heated debates about how to best scale the network to handle more users and transactions. One faction advocated for increasing the block size, allowing more transactions per block. Another group favored off-chain scaling solutions like the Lightning Network. Unable to reach a consensus, the disagreement resulted in a hard fork in August 2017. This fork created a new version of Bitcoin called Bitcoin Cash, which had larger blocks, splitting the community and the network. Following the dizzying heights of 2017, Bitcoin entered another extended bear market. Prices fell sharply throughout 2018 and remained relatively subdued into 2020. Many predicted the demise of Bitcoin once again. However, beneath the surface of declining prices, development continued at a steady pace. Innovators and developers worked tirelessly to enhance the Bitcoin protocol and build out the surrounding ecosystem. A significant focus was on second-layer scaling solutions. The Lightning Network, designed for faster and cheaper Bitcoin transactions, saw considerable progress during this period. This ongoing technical development demonstrated the resilience and long-term vision of many within the Bitcoin space who were less concerned with short-term price fluctuations. The period from late 2020 into 2021 marked a significant turning point for Bitcoin. It began to gain serious attention from mainstream institutional investors and corporations. Companies like MicroStrategy and Tesla made headlines by purchasing billions of dollars worth of Bitcoin as a treasury reserve asset. This signaled a growing acceptance of Bitcoin as a legitimate store of value, often likened to digital gold. In a groundbreaking move, El Salvador became the first country in the world to adopt Bitcoin as legal tender in September 2021. This decision, while controversial, was a powerful endorsement of Bitcoin's potential as a currency and a tool for financial inclusion, sending ripples through global financial institutions. The years 2022 and 2023 brought renewed turbulence and significant regulatory challenges. The collapse of several major cryptocurrency platforms, most notably the FTX exchange, shook market confidence. These events led to increased scrutiny from regulators worldwide. Governments grappled with how to classify and regulate digital assets, leading to a patchwork of different approaches across jurisdictions. Discussions centered on investor protection, market integrity, and the potential risks cryptocurrencies could pose to financial stability. This period highlighted the urgent need for clearer regulatory frameworks to foster innovation while mitigating risks in the rapidly evolving digital asset landscape. It was a stress test for the entire industry. Despite the market volatility and the looming regulatory uncertainty, Bitcoin demonstrated remarkable resilience. Its core technology continued to operate flawlessly, processing transactions and producing new blocks without interruption. The network's decentralized nature proved to be a strength, making it resistant to single points of failure or control. Interest in Bitcoin did not wane. In fact, for many, the challenges underscored the importance of its foundational principles of transparency and decentralization. Developers continued to build, and long-term investors, often called hodlers, largely maintained their positions, believing in Bitcoin's enduring value proposition beyond the speculative noise that often dominated headlines. As we moved into 2024 and now find ourselves in mid-2025, Bitcoin has entered what many consider a new era of maturity and mainstream acceptance. A key event was the fourth Bitcoin halving, which occurred in April 2024. This pre-programmed event reduces the reward for mining new Bitcoin blocks by half, effectively slowing down the rate at which new Bitcoins are created. Historically, halvings have been associated with subsequent price increases due to the reduced new supply entering the market. This event further solidified Bitcoin's characteristic of digital scarcity, a feature highly valued by its proponents, especially in an inflationary global economic environment. The anticipation and successful execution of the halving reinforced confidence in Bitcoin's predictable monetary policy. A monumental development in this new era has been the approval of spot Bitcoin exchange-traded funds, ETFs, in major financial markets, most notably the United States. These approvals, which began rolling out in early 2024, provided a regulated and accessible way for traditional investors and institutions to gain exposure to Bitcoin without directly holding the underlying asset. The launch of these ETFs saw significant capital inflows, contributing to a renewed bull market. Bitcoin reached new all-time highs in 2024 and has maintained strong price levels into 2025, driven by this increased accessibility and institutional validation. This has fundamentally changed how many traditional finance players view Bitcoin. Bitcoin's impact on the global financial landscape by 2025 is undeniable. It has challenged the dominance of traditional fiat currencies and centralized financial institutions. It has spurred innovation in financial technology, giving rise to the broader field of decentralized finance, DeFi. While it has not replaced traditional money, it has carved out a significant niche as a store of value, a medium of exchange in certain contexts, and a speculative asset. Its transparent and immutable ledger offers a new paradigm for trust in transactions. Nations and central banks are now seriously considering or actively developing their own digital currencies, partly in response to the rise of Bitcoin and other cryptocurrencies. Today, in June 2025, Bitcoin is perceived in multifaceted ways. For some, it remains a volatile, speculative instrument. For others, it is a crucial hedge against inflation and economic uncertainty, a form of digital gold. Its use cases continue to expand from cross-border remittances to empowering individuals in countries with unstable financial systems. The technology improvements, such as the Lightning Network, are making it more practical for everyday transactions. Bitcoin's journey from an obscure white paper to a globally recognized financial asset is a testament to its innovative design and the enduring power of decentralized networks. Its legacy is already profound, symbolizing a fundamental shift in how we think about money and value.